Okay, when people start to have a tiny little bit appetite to put money out and people feel like uncertain about the future, they tend to put money into gold. Actually, you found out that every recession, every downturn of the stock market, gold always the first to come out of it. Always the first. So if you think about that, in 2000, 2008, and then even recently 2020, stock market crash, gold come out first. So even for investors not interested in gold, you're watching gold price actually can give you a direction of the where market is going to be in the next few weeks or few months. What happened was there's a margin call, there's a fear. Usually money goes to the cash, the sideline, right? And then the US dollar go very strong, that's negative for the gold. So when the market crash, gold actually tend to go down initially. However, when there's a lot of money on the side, okay, when people start to have a tiny little bit appetite to put money out and people feel like uncertain about the future, they tend to put money into gold. It would be bad for gold, but if you think about that, people are talking about a Paul Volcker potentially raising interest very high and crash everything, including gold. But that was then, this is now. We have 30 trillion. I mean, United States have 30 trillion in debt. Okay, if the interest rate go up, even it go up to 4%, you think about how much trillions of money will pay each year for the interest rate. You think about there's so much populism in US, United States right now. People will say, oh, we don't want to pay the fat cat, the Saudi Arabia, we don't want to pay China all the interest rate. Right, there will be outroar on that. So I don't think United States, the Fed or the interest rate can go to a very significant high. Actually, necessary to crash inflation. I don't see that happen.
Which will rise faster, interest rates or inflation from now?
Oh, interest rate will rise. Interest definitely rise. But I feel inflation, there's a very strong evidence. There's a lot of materials are going down, a lot of prices are going down. Computer components like iPad are going down because there was overbuilt during the pandemic. The price are dropping very hard. I showed in one of my slides, the memory went down 70% in the past few months. So the goods inflation already start coming down, but it really is a service, a house, those inflation will stay for a while. So I see in general, inflation rate may come down a little, but interest rate will come up, definitely. You look at the United States government data, it's Q1, it's already Q2, we are actually riding very, very thin. Okay, at the end of this month, it's end of Q2, then the data will come out in August. There's a very reasonable chance Q2 or we may go negative on GDP again. Then the 2 quarters of negative GDP, it's a recession. So many companies are laying out people. I mean, the crash and then the sentiment's going down. Consumer sentiment is the lowest in the decade. So all these come. We still have a few weeks to go for the quarter. We may have a negative quarter again. Oh, recession is already here.
What signs do you see?
In a lot of sectors, you think of stock market is a leading indicator, okay? And then you have a consumer demand, consumer willingness to buy good, buy car, buy large item. All these are at a historical low, right? So the Fed, if they're tightening, probably people already pre-prepared for that. The stock market, the forward-looking animal, right? They already look at forward. They say, oh, we will have a crash. So that's why everything's coming down in the past few weeks.
Has gold typically been a leading or lagging indicator of economic recovery?
Actually, it is a leading indicator. Every time gold bottom first, gold goes up,
and then the economy recovers.
What happened was usually, if you watch it carefully each time, gold goes up and then stock market goes up after a few weeks or few months, and then general market goes up because everything is, so gold actually is a canary in the coal mine. So even for the investor not interested in gold, watching gold can give you a good indicator of where market goes. When you first sell off, right now we are in the middle of sell off, there's huge money pile into the bank account in the sideline, on the sideline, waiting, they're collecting zero or negative interest rate. People are so scared. Gold actually is has tiny risk, right? If you want to take a little bit of risk, first thing you buy is gold, and also people see coming out of the recession, gold will do very well. So when people willing to a tiny little bit of risk, they go to gold. We have to see the data in Q2, right?
Yes.
We still have a few weeks,
Yes.
And then we may potentially get in a real deep recession next year. Okay, when we coming out of it, I think it's one day we can watch that the Fed finally blink. They say, okay, we cannot, tighten like this anymore.
Yes.
That's when the gold will rally really, really hard, and then a lot of other risk assets will rally, and then that's where we start coming out of recession. Maybe we need to do another QE. I think the best investment is still in commodity, because if you look at all the past recessions, okay, the inventory commodity, not just gold and silver, inventory are quite low. Okay, so and then the commodity price likely drop, but then any quick stimulus, the commodity price will come back very quickly. And in particular, I like silver. Yes. I think we're at the eve of a silver boom for the next decade.
Okay, so you were bearish on the cryptocurrencies. What about stocks? Do you think the S&P 500 and the NASDAQ has fallen enough?
I think they've fallen a lot. If it's enough, if it's the bottom, I'm not sure. They may go down another 5-10% easily.
Yeah.
Okay, but for long-term investor, you should start looking for opportunity in gold stock, in ADR, in biotech, in other stocks. Gold stock should do well. Gold stock do very well. Yeah, gold stock can do very like in the 1930s, 1920s, 30s. I mean, at that time, gold price was fixed.
Yes.
Okay, gold price was fixed, and then the economy, stock market going down, the cost is going down. Okay, a lot of people looking for a job. Actually, gold stock did very well, outperform everything.